we have been talking about on this show how there's been this divergence. Just like you mentioned that this is a record July for the downturn, the sell-off in the last couple of days. We also have had a record in the divergence between, you know, how much money has been going into symbols like 3 or 4 of the Magnificent Seven versus the rest of the S&P 500, right? If you look at my chart, this is the S&P 500 and this is the S&P 500 equal weighting, where this index shows if we were to take each one of the 500 stocks and give it an equal share of the index rather than having them weighted by how big their market cap is. And so what you see here is that most of the stocks have been in a sideways move. But then when you start to look at, something that's weighted by the size of the company, what this shows is that a lot of money has been flowing into just a few names. And it just got to be the point where those names started to get bloated, right? And, we got reports from Google this week. And yeah, they did better than their guidance, but they said a few things during their call, like for instance, that ad revenues, their core business, what's been fueling them for decades, their ad revenues, especially on YouTube, are down, right? And so that worries investors who want to make sure that they're going to get their money back. And then what they also hinted at is that AI is going to take more investment and more time. It's not going to satisfy investors instant gratification the way that investors expected it to. It's going to take more time and more money to get it right and to get it to be monetized. And so that freaked people out. Add to that Tesla really missed their guidance big time. And you started to see a lot of money flowing out of these big names and going into defensive places in the markets and investing in general.